what does this management representation letter look like? Well, let's dive in. It should be dated the same day as the audit report. That should line up, which is pretty important because, as we said prior, we need to see that what we are reporting on, what we're giving the opinion on, is fully represented and taken responsibility of by management. The auditor prepares it. So the auditor prepares the actual letter, says management's responsible for X, for Y, and we'll talk more about that later. I mean, we talked about it a little bit more, but we're going to continue to dive in. The auditor prepares it and management just signs it. Obviously, management should read it and read what they're signing and taking responsibility for, but the auditor actually prepares it. That could be a question asked. Don't get tricked by that. It's addressed to the auditor, so you might think it's weird. The auditor's preparing a letter, and it's actually on client letterhead. So this letter, the auditor prepares it. It's on the client's letterhead. It's addressed to the auditor, so you're writing a letter to yourself, and then you are just having the management, CFO, president, all these individuals sign off on that letter, and that is how it actually works. So for some of you, might be a new concept, might be a little strange. Other of you might not be, but that is how the process works. Right? These little nuances that you might not know. For again, we talked about this when we went over testing, but when you are observing physical inventory accounts, you're not the one actually counting per the book. In reality, you might actually end up counting the inventory, and maybe many of you have, but it's actually supposed to be the client counts the inventory and you watch the client count the inventory. And lastly here, the management representation letter exists to reduce the possibility of misunderstanding. Again, taking responsibility for something exists to reduce misunderstanding, so we know as the readers of the financial statements who was responsible for what. Management's responsibility for the financial statements. If management refuses to provide this letter, well, that's a problem. That's a critical piece of audit evidence there. The auditor cannot provide an unmodified opinion and should withdraw from the engagement or disclaim an opinion. This is a scope limitation, just like if they don't give you certain audit evidence, just like if the client restricts access to certain employees. Any scope limitation is going to result in a withdrawal from the engagement or a disclaimer of an opinion. Here are some statements that are included in the management rep letter. And I mean, instead of just showing you the whole letter, let's kind of bullet point the most important points there. Some of these are going to be a little more tricky. Some of these are going to be just, okay, duh, that makes sense. And hopefully by the end of this, you're saying to yourself, wow, okay, it all makes sense. And Nick is just wonderful at explaining things. And well, thank you for that. Thank you for thinking that independently of me just saying that. Well, let's dive right in. So in this rep letter, we're going to have a statement that the financial statements are management responsibility. We've gone over that. Sounds good. Now you could see a sim that asks you which select, let's say 10 items that are in the management rep letter. That could be tricky, right? Because not only do you need to know that something like this would be, like, you might know that the financial statements are management's responsibility, but in this particular letter, you might not know if this particular true statement is included. Now, this one I think is a little more straightforward, but that's just something to keep in mind, right? While it might be difficult to, let's just say, memorize every single thing here, and I don't recommend you memorize every single point here, just try to get as familiar as possible. So if you see a sim like that, you know what is going to be included on this letter. We are also going to include that the information is complete. It's not lacking anything. Fraud is disclosed, right? Because that would be a problem if there was fraud going on and management knew about it and did not talk about it. Statements on the design of internal controls to detect and prevent fraud, that management has responsibility over these and that they are sufficient. On how they assess risk, covering all periods reported on by the auditor. It's going to say this was an audit of, let's say, year 1 and year 2. Knowledge of laws and regulations and non-compliance with said laws and regulations. That management's accounting estimates are reasonable. Like, wow, we are really giving a lot of responsibility to management here, and actually rightly so, right? We talked about this all the way back in SOX, and this is management's responsibility. If you're going to be a highly paid executive, guess what? You're going to have to take a lot of responsibility for the company you're running. Disclosing knowledge of fraud or suspected fraud that impacts the entity involving management, key employees. So while we even have a point that says that any fraud known to management is disclosed, we have a separate point here because this is so important. Knowledge of fraud for any key employees, people who can make a significant impact on the company, is disclosed as well, right? That is just worth making a whole separate point, essentially, right? We've talked about how there could be a bunch of fraud with the smaller employees, right? The lower level employees. If you're a big retail company and a lot of your cashiers are stealing cash out of the register, That may not be the end of the world if it's immaterial. However, even the most immaterial fraud, if it's committed by management, that is a problem because it's indicative of larger problems if those leading the company are committing fraud. Lastly, here it's going to include statements that all of the following have been accounted for and disclosed. These are essentially just the disclosures, the footnotes of the financial statements that you've seen in FAR, and really just everything we've talked about. We'll continue to talk about in this lesson, and some of them have their own lessons, like subsequent events, making sure that these are all properly disclosed. All right, why not? Let's show you an example of a management letter. Now, I would just say what we saw as a bullet point summary. Make sure you're familiar with that. But yeah, take a read here. I was going to read this whole thing, but it is kind of a lot. I'll read it. You can skip through it if you want. That summary we just had in the prior slide, I think, is a good summary of what you're going to see. But I'm going to read through it. If you want to continue with me here, then feel free. The more time we spend together, I think we'll both be happier, right? So it's to the independent auditor. Remember, the auditor is putting it on client letterhead. They're saying, it's Macy's, right? Big retail company, Macy's. It's signed on their letterhead, and it's written to the auditor by the auditor. We are providing this letter in connection with your audit of, let's say, the cash flow statement, the balance sheet for year one, the name of the entity for Macy's as of these dates for the periods, and what's the purpose, expressing an opinion as to whether it's consolidated financial statements or just financial statements, present fairly in all material respects. The financial position, balance sheet, results of operations, income statement, and cash flows, which these are the big three financial statements, cash flows of the entity, in conformity with accounting principles generally accepted. So GAAP, right? Kind of fun to just see the formalities and ways that they kind of talk about this. We confirm that we are responsible for the fair presentation of these financial statements, of financial position, the results of operations, which is the income statement, and cash flows in conformity with GAAP. So taking responsibility for the presentation, the numbers, taking responsibility for pretty much everything, right? What is the only thing that the auditor takes responsibility for? That is reasonable assurance on their opinion. Reasonable assurance that the financial statements are free from material misstatement. Certain representations in this letter are described as being limited to matters that are material, right? Because we are not going to disclose immaterial fraud by, let's say, our cashiers. That's just not worth anyone's time. So that's an important key point to read here. Items are considered material regardless of size if they involve omission or misstatement of accounting information that, in light of surrounding circumstances, make it probable that the judgment of a reasonable person relying on the information would be changed or influenced. Now, that's just a key point we've seen throughout the entire exam, right? We are seeing that, okay, yes, there's fraud, or yes, we have misstatements, but is that going to change a reasonable reader's interpretation of the financial statements, right? Is that actually going to affect their decision to invest or not invest, to lend money or not lend money? That's pretty important there. Continuing on, it says, we confirm to the best of our knowledge and belief the following representations made to you during your audit. The financial statements referred to above are fairly presented in conformity with GAAP. We have made available all financial records and data, minutes of meetings of all these key employees and key members charged with governance. There have been no communications from regulatory agencies concerning noncompliance or deficiencies. Again, this was all summarized on our bullet points that we saw prior, but just nice to see the actual representation letter and how we break it out. If you couldn't take a guess, this is pulled directly from the AICPA's authoritative literature. So, I like bringing that in here to show you what it actually looks like. But at the end of the day, it's nicer to just summarize it up and just show you that way. There are no material transactions that have not been properly recorded. We believe the effects of uncorrected misstatements summarized are immaterial. That's pretty good there. We acknowledge our responsibility for internal controls. That is a key point that management takes responsibility for. Continuing on, having a good time reading what the AICPA has written for us. We have no knowledge of any fraud involving management, the employees, or others where there's a material effect. Right? This includes, okay, let's say, yeah, we have a bunch of cashiers committing fraud, but let's say altogether that fraud constitutes a material misstatement. So that would be included here, taking responsibility for no knowledge of that. We have no knowledge of allegations or fraud affecting the entity received in communications. So just, again, kind of just a nice catch-all there. The company has no plans or intentions that may materially affect the carrying value or classification of assets and liabilities. That one we didn't discuss in the bullet points, not as important, but that's just another disclosure that we saw here. The following have been properly recorded and disclosed. Pretty much just all of these disclosure points, a lot of them we'll cover here, and other ones just have their whole own section dedicated to them.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.Examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.